So a loan officer from a major lending company just stated that his middle class home buyers are accepting payments over $7,000 a month, thinking that they're going to refinance later. Isn't this absolutely ridiculous? So everyone can see that even though you're middle class, you're not the richest folks on earth, right? And you're taking this large payment and you think the government, the Fed, which is trying to tame the market, which is trying to sort of crash the housing market, is going to put down interest rates anytime soon. Right, these people are delusional, right? And the other thing is that it affects regular home buyers, right? Because now you're just driving up home prices, right? We already have a short supply of housing. And then on top of that, the housing that's on market, that's good condition, they're highly priced, but people like these people are buying these housing at these prices. And so what it does for investors, they're all like, hey, I might as well charge this much, right? Just like the car market, you see that where people are accepting car notes as high as $1,000 a month for a basic vehicle. You're not getting a Lamborghini, right? You're not getting a Bentley. You're getting a Ford F-150. You're getting a Kia, and you're paying $1,000 a month. And so you're seeing that happening on the housing market side. And so we're going to go over this article, go over exactly what this loan officer is seeing in his market. And even him, where he's trying to make as much money, he sees the telltale signs of where we're heading as an economy, right? Where, okay, now it's getting a little bit crazy, right? These are telltale signs that we are heading into different territory. Now, I don't know exactly when home prices will crash, when they will go down, but all I know is that what comes up must come down. And so I don't know exactly, like I was saying, when it's going to happen. Maybe sometime soon, maybe in 2-3 years. But this is a sign showing that people are really stretching their budget in order to buy an overpriced home. So make sure you all subscribe to this channel and let's read this article. All right, loan officer. I'm seeing middle-class home buyers take $7,000 mortgages thinking they can always refinance when rates come down in the future. All right, so December 2021, as you all know, mortgage rates were around 3.1%. $700,000 mortgage would be just shy of $3,000 a month. That same mortgage would be $4,600 a month, right? Plus, you have $583,000 more payments because of interest and everything over 30 years than that 3.1% rate. And so you see people, yeah, you are going to spend more, but on top of that, the monthly payment, like, you don't understand compounding interest and all that goes into making a mortgage payment and how much interest you're paying, especially on the front end of your loan. Now, just speaking with Fortune, Downs wrapped up the call with a middle-class couple in Washington area who told them they were expecting a mortgage payment of around $7,000. So this is normal. And now I know DC is it's a high cost of living area and things of that nature. But it's still crazy that people are accepting that. Now, these couples, they make decent money, $270,000. That's decent. And if you break that down, that's around like $23,000 a month. And so they're under that like third that you should spend on housing. But the way the economy is, like, should you really stretch your budget to spend a whole third of your income towards housing, right? How about other areas of your house, right? The maintenance, the property taxes, the insurance, the things that come with owning a property. And on top of that, how about your grocery bill? How about saving money for tuition for your children, right? All these other factors come to play, right? That's why I like to be under 25% of my income when I'm buying a house. And on top of that, to at least put 20% down. If you cannot put 20% down on a house, you shouldn't be buying it. Now, in certain circumstances, like honestly, if you're living in a house and you're renting out bedrooms or it's making income, that can change a little bit. But if you're just a family trying to buy their house, that 20% really comes in handy, especially when home prices start to fall. You at least have at least 20% equity in your property. So they've already concluded that these high mortgage payments will be short-lived and they'll simply refinance to a lower payment once mortgage rates come down. But when will that happen? We do not know that, right? That's trying to time when home prices will fall. They're trying to time when mortgage rates will go down. I don't think the Fed is going to bring down interest rates anytime soon. They're not going to do it this year. They already promised 2 more interest rate hikes. And then next year, I think it's going to be the same thing. You're going to see this increase in mortgage payments in your mortgage throughout the next year and a half for sure. Now, that's over the past year, rates have spiked from 3 to over 6. How are buyers in the market reacting? He said they're going through the 7 stages of grief, and it seems like a lot of buyers now, they're in the acceptance and hope phase. So you saw that happen, like, I think when initially the Fed started hiking these interest rates so much, a lot of people did slow down buying houses. But now I think people are just used to 7%, right? And so now they're going out, they're buying these homes and looking for these properties. But the thing is, like, the Fed, in doing so, limits the inventory levels and keeps keeps home prices elevated. Now, the other thing is that they say, when I say buyers are comfortable with these payments, I know there are also 2 to 3 times more buyers who run payments using calculators who opt out of having conversations in the first place. To prove this, our pre-approval credit pools, a measure of top of the funnel buyer activity, are running about 50% lower than pre-pandemic. So more and more people are not being able to qualify for a lot of these loans, right? And so they're operating 50% lower than pre-pandemic, which is absolutely ridiculous. Now, among the buyers you are working with, how high are monthly payments getting? And how do they react when you give them the number? And so he was just comparing, so people in the DC area, $3,000 for a condo, $4,500 for a single family home. That was the norm. Now, those are $4,000 for a condo, $6,500 for a single family home. So yes, the payments are dramatically higher today, but buyers' residual income is still a healthy range due to local wages. So we have to see both sides. Yeah, there are some people that are making more money. They're in the tech industry, they're in their 30s. They don't have no kids, and they have enough money to actually go out and buy these homes. But are they pushing their budget a little bit too much? And what impact does it have on the greater community around them? Remember, we are still talking about a much smaller pool of buyers in the market today. So this conversation is skewed towards those with more fortunate lifestyle. So his clients are middle class, but they're higher earners, right? So like we saw with the example, the couple that we were looking at, they were both making over 6 figures, right? And so even though that's still considered middle class, it is on the higher end of middle class. But then again, you're still middle class. You're not super wealthy. So even though you're paying $7,000 a month, what other things are you paying in your lifestyle, making that much income, right? Do you travel a lot? Do you spend money a lot on clothes, on food? Like, what are the other things that contribute to your overall budget? Now, tell us a little bit more about what you see in, like, what the differences, or compare the second half of 2022 to the first half of 2023. And the loan officer stated that one common theme is that buyers at every price point seems much more sensitive to the property's condition. When the housing payments are this elevated, it doesn't take much for the buyers to walk away. So this is actually a good sign for the housing market, that more and more people are okay with walking away from a property if something comes with inspection and they're like, hey, I don't want to mess with that. Because we saw during the pandemic, people were just accepting properties, no inspections, no appraisals, none of that. And they were just buying housing. And so you're seeing that less right now, right? Especially people looking for these higher priced homes. It's crazy to think that, that we used to do that these past couple of years, just ignore inspections and appraisals. But it seems like now people are coming to their senses and they're taking that into account. And I did notice, like, usually when there's an updated house, that house goes like that. Like, you could buy a house, honestly, a decent house for a decent price, it might be built in the 60s. It might not be updated, but everything works, right? It probably has old cabinets. Maybe you had to change up the floors, right? And so there are options out there, but people are wanting like updated homes like these. So lock-in effect. So this refers to people who are locked into their mortgage, right? They have a low interest rate on their property. Why would they move and get a similar house that's almost twice as much or significantly more than what they bought their house for? And on top of that, their mortgage payment is higher because of higher interest rate and the higher cost of the house. And so you're seeing that happen, where homeowners are just staying put, right? And that puts supply down and increases price, or keep prices elevated. So in my opinion, that would be the person who sells a $700,000 home to purchase a $1 million. They currently have a PITI of $2,750. The new payment would be $6,000, rolling their equity as a down payment. That jump is too much for most, especially with those with median income, right? Because there are some normal people like normal income earners in DC area that bought their property at a good time, right? And their property appreciated a lot. They can't move. They cannot move, right? They can probably take money out of their house, but then again, that's another payment. And so a lot of people are kind of stuck where they're at, right? They don't have as much flexibility, right? And things of that nature. So, what are their thoughts on 2024? One thing that this loan officer expects is that work from home will start coming down. And so that's going to move people out of the suburbs, out of these cities that started to boom, back closer to the main downtown areas, right? And so those homes will be for sale now, and that will create more inventory. I don't know exactly how much I agree with that. I do think, yes, more and more people are going to go back to the office to work. However, I don't think we're going to go back to pre-pandemic levels. I think more and more companies are adjusted to a lot of their employees working from home, and they're going to keep that for the foreseeable future. Now, housing market affordability is at a level unseen. Do you have any advice on how would-be buyers can ease that burden? And here he was just talking about, be patient. And that's the thing. Like, a lot of people are trying to get into a house that they really can't afford, just trying to push their budget. And it's all like, hey, sometimes it's better than renting. I mean, sometimes renting is better than buying. Because why would you buy a house? Because even if renting is not even that much lower than your monthly payment, you have to take into account everything that comes in with buying a house: the down payment, the process, the maintenance, the property taxes, the insurance, and things of that nature. And so there's so many of these phantom costs, right, that comes into buying a house that you don't see, but it contributes to your budget, right? It hits your budget, it hits your bank account. And you're like, at the end of the month, you're like, wait, why do I only have this much left in my bank account? And so, housing used to be a stepping stone for many, but the low rate environment of the past few years allowed everyone to get what they wanted right now. We seem to have lost the art of having patience in life. Wow. Hearing that from a loan officer is pretty impressive, because you always think, oh, they're just thinking money. They're just thinking the next deal. But, this loan officer seemed to, understand both sides. Like, yes, I run a business. I work with high income earners. And then on top of that, he sees the negativity or the disadvantages of what's happening in the market. And so that's what I appreciated about this article. Reading some of the comments are just interesting, just reading what people are thinking. Right here, people are just talking about, people take on loans that are unsustainable, that can lead to pre-foreclosures and things of that nature. Other people are saying, no, this is not risky. Like what we're doing in 2008 is different than what we're doing now. Like, even though people are taking $7,000 mortgage payments, they're making $23,000 a month, right? Back in 2008, if you made $10,000 a month, they would approve you for a $7,000 loan, right? And so it's a little bit different. So you have to see both sides, right? But most people are on I don't know how people are affording these payments. We're going to crash and burn. And yeah, like I do agree. Like people think that we're going to see 2 to 3% rates anytime soon. They're delusional, honestly, because especially these people who are accepting $7,000 loan. No, don't do that. Or if you're going to do that, make sure you have the money, but don't think that you're going to refinance in a year, in 2 years, in 3 years at a lower rate. It's not going to happen because honestly, 7% is still relatively low in the grand scheme of things. Other people just talking about, we can easily get a higher price home. But right now we're comfortable and we're putting our money towards other things, right? Like saving for college tuition. And if and they talked about, they recommend people having at least 20% down to buy a house. All right, you all, let me know what you all think of middle class earners taking $7,000 mortgage payments and what that means for all of us. I hope you all enjoyed this video. Just a simple video, just talking about the housing market. Make sure you all subscribe and I'll talk to you all later.